Well, hello there again, friends. My name is Andy Green. I'm with Green Group Real Estate at Keller Williams Realty Professionals. And I am joined today by the one and only Miss Annie Ransom with All Pacific Mortgage. It
Hello.
has been a while. It's been a while since we hopped on one of these calls and talked about real estate and what's going on in the market.
I know it's so good to see you, friend. I have missed you and missed our Mondays, and so excited to be back.
You know, I hate to say it because it kind of makes me sound like a little bit of a slacker, but I have been on like 5 or 6 rivers, actually 5 rivers, and 2 of them, or one of them, I went twice on 2 different fishing trips. So I've just spent a lot of time outdoors in nature with some of my best friends in the world. And I haven't really been checked out, but I've just been enjoying this time, with COVID and everything else that's going on.
Yeah.
I haven't been super excited to go out and be in public a lot. So if I can go out and be in nature and do some awesome fishing with good people, why not?
Yeah, it's great to disconnect, and that's kind of what we have to hang on to right now, right? We have to do that for ourselves. So good for you.
Thank you. Thank you. And it's really good to be back and see you as well. So
Yeah.
let's get after it, shall we?
Do it.
Okay, so we are going to be talking about the Portland, Oregon real estate market. And since it's been a little while, it's probably been a month or maybe a month and a half since the last time we talked. I don't think that there's been a dramatic change in the overall real estate market, but there are definitely some challenges that I see people facing right now. And let's just get into some of those challenges and fill in the blanks. Okay.
I love it. Let's go for it.
Okay. So let's talk about the Portland real estate market and where we're at. Look at some key numbers, some key indicators. And I think what you'll see in this is it's just a story of supply and demand. The supply is extremely low. We are talking historic lows in inventory levels. And you can see that in this chart right here. We are at, as of September, 1.1 months of supply. And looking at last year, we were at 2.8 months of supply.
Yeah.
So that is a dramatic drop in just overall inventory levels. And it's totally valid. Like there are just some people that they don't need to move and they don't want to. And even if they've been thinking about it, now's just not the time to have people coming through their homes, right? Even with all of the precautions that we're taking, and I feel like the real estate industry as a whole has done a really good job.
Yeah.
To each their own, right?
Absolutely. So to put this into perspective, Andy, what is a normal, healthy amount of inventory? If all things are great.
Yep. So I think that you're going to get different perspectives on this, but let's just say that it's somewhere around the 4 to 5 months mark. So that is a pretty healthy, normal level of inventory. And so if we're at 1.1, last year we were at 2.8, which is still historically very low, just not all-time low.
Sure.
We've gone from 2.3 months in May to 1.5 to 1.2 to 1.3 to 1.1. And if we're looking forward to see what we can project that's going to happen over the next 3 to 6 months as we go into the fourth quarter of 2020 and into the first quarter of 2021, I see inventory levels staying relatively low. This low, probably for the next 3 months, I think that we're going to see extremely low inventory levels. My hope is that next year, as we get through the first quarter and start to get in the second and kind of the peak selling season, as you see people really starting to put their homes on the market, that we're going to see some more healthy numbers. But I don't have a high level of confidence in that unless we come up with a vaccine and a cure for this thing. So until COVID's over, I think that we're going to see extremely low inventory levels. Now, I talked about the perfect storm. It's the perfect storm because you have inventory levels at historic all-time lows, and you have interest rates at historic all-time lows. and it's creating this surge of demand in the market. So there are so many buyers out there that are looking to make a move and make a change, and it's pretty tricky navigating those waters with low inventory levels the way that they are, right?
Absolutely. Absolutely.
So we have new listings. You'll see here that new listings decreased 5.9% year over year and decreased 16% from August 2020 to September. So again, that's in line with low inventory, new listings hitting the market, extremely low, and then pending sales are really strong. So you have let's see, pending sales increased 17.3% year over year. So September 2019 to September 2020, it's a 17% increase in homes that have gone on the market and gone off. So they've gone pending, and it decreased 14.7% from the previous month in August. So what that tells me is that there was a glut of home buyers that during March and April, May, they didn't make a move, and they really probably needed to. So you saw this big surge hit after things started to just settle in a little bit. We figured out how we're going to do business and how we're going to keep people safe. Yeah. And then you go to closed sales, increased 36.8% year over year.
Crazy.
That was my dramatic pause. Did you see that? Did you catch that?
I did.
30 closed sales increased 36.8% from September 2019 and increased 3.2% from August to September. We've already talked about inventory levels. They decreased to 1.1 from 1.3 months, and total market days decreased to 38. And I think it was pretty close to that last month, somewhere around 40, right around there. The good news this is what the picture that I'm painting right now is that it's a challenging market. It is. It is a challenging market for you. It's a challenging market for me, and it's a challenging market for consumers to sift through all of the information, and whether it's the news or conversations they're having with friends and family, and they're dealing with fears and anxiety, and it is super challenging. But the good news is that because of all of this, the housing market has remained incredibly strong in the Portland, Oregon area. And we see that in average and median sales price increases year over year, 5.7, about almost 6%. So let's call it 6%. The home values have increased in the Portland metro market, and that means that people's equity is being protected. It's actually growing during this challenging time. What's that?
Where can you get 6% on any investment right now? It's phenomenal.
Yep. So with that being said, let's move on. And what I did is as I was getting ready for this market update, I wanted to see, I don't pay a lot of attention. I don't watch the news, very, very rarely. I don't really go searching the news online either. I try to protect what I put in my head. And I just think there's so much crap out there that I'm going to be very careful about what I let in. So as I'm preparing, I go out and housing market, let's see what everybody's saying, the experts are saying. And I saw two themes. I saw storms. So that means a little bit of chaos, which we know, and we've talked about that, and weather. And it mostly has to do with heat, because it is just such a hot housing market right now. So you see this first one on the screen here, the scorching hot housing market. Yesterday's home sales report wasn't your typical sales up, blah, blah, blah % kind of report. It was shockingly strong. The housing market is now basically as strong as it was in the heat of the housing bubble. That's pretty stunning stuff. Yeah. So that came from Kelly Evans with CNBC. Next one is U.S. housing market heats up ahead of election. National Association of Realtors this week reported U.S. existing home sales surged in September to levels not seen in more than 14 years. With so much of Americans' wealth tied up in the home that they live in, that offers a welcome financial buffer in a decidedly uncertain economic moment. Jonelle Marty with Reuters.
Yeah, and on that note, I think that's super interesting. When we first started doing this, was it either late March, early April was when we first started doing these lives. We had made the point that most Americans have a chunk of equity saved up in those properties. And one thing that I think is really important from a financial perspective is that your house plays such an important role in your overall financial well-being. Years ago, when 2006 era, when people were completely over leveraged in their property, they were having to sell their properties. They were foreclosing, short sales, and so on. We're just in such a different place right now where people can draw from that equity if they experience a financial hardship. Or if you sell, I mean, those numbers that we talked about before, that really low inventory, it places a seller in such a unique position. I mean, I'm sure that you have a good perspective on this too, but if you're a seller and you need to sell your home, what a phenomenal time to be a seller.
Yep.
So
there is literally never been a better time. And that's my opinion. And I'm sure that there are some reports that could actually back it up if I were to do some research and dig in a little bit. But when have sellers been in a position like this with that low of inventory and that many buyers in the market?
Well,
I've never seen it.
History.
I've never seen it. My family has been building and developing and been in real estate for, I don't even know how long, 50, 60 years. My grandmother sold real estate in Idaho for somewhere around 30 years. Like literally, I have been living and breathing real estate my whole entire life, and I've never seen anything like this. Sellers are in such a strong position, but there's also a flip side to it. If they're a buyer as well, that means some real uncertainty, some anxiety, some fear, and some challenges. Yeah. And we've been successfully navigating through those and helping people accomplish their goal day after day after day. So it's 100% doable. It's just challenging.
Absolutely.
Right? Yep.
Absolutely.
So one thing that you mentioned and I thought about was the difference in those housing markets and the amount of equity. And I think that what I remembered from those earlier live streams was us talking about there's never been more savings in home equity ever. So we went into this time period in that sort of a position, which puts you in a strong financial position. That's why we don't have the number of short sales and foreclosures like we did during the last crisis, because I started Green Group here in Oregon in 2011. And it was just as we were coming out of that. 25% of my business, the first year, 2 years, was short sales. 25% of my business. So like I got really good at short sales. And now, like you look at the market that we're in now. So if that was a market that had its own challenges in those ways, well, today's challenges are different. It's called multiple offers.
Right.
That's it. That's our challenge. If you want to call it a challenge, is that we have to deal with multiple offers on a regular basis. Right. And I've dealt with multiple offers for years and years and years, but never anything like this.
No.
Like I've just never seen anything like it because I don't think that it's ever happened. So.
Right. Yeah.
So that was the time era of short sales, and now we're in the era of multiple offers. So next headline: the housing market faced uncertainty in March, but now it's a circus. It is. I had a sales trainer early on in my career, and I was in new home sales, and we had literally, I want to say it was like 12 model homes in one neighborhood. So I had to navigate all these models and these tons of people coming in. It was busy, and we called it a 3-ring circus because you have to manage so many things within each ring, and it makes it interesting. So that's what I thought of when I saw this. But it's a circus. Yeah. It is a circus out there, and these real estate agents can say they can barely keep up with demand. And then if you were to look at that article, you'll see perspectives from agents from throughout the nation and how they're navigating this time. But circus, and we're barely keeping up with demand, especially on your side. How are you keeping up with it? Because every lender that I know, and I've got a lot of lender friends in this business, and they're all, I'm like, nobody's ever seen anything like this. They are crazy busy.
It is absolutely that. Yeah. I have a lot of lender friends also. I like to rub elbows and kind of see what different people are experiencing. And, the general consensus is, well, first of all, we're all busier than we've ever been. This is an absolute record year for refinances. There's still a huge demand of people trying to purchase real estate. It is just the perfect storm for people in this industry, in a good way. But of course, that all creates challenges. I know a lot of the big name banks out there, they're just completely inundated with mortgage applications, some of which are not doing cash out refinances, period, right now. Others are running at about 90 days for transactions. So, I feel really fortunate. I have a phenomenal team that is supporting what I'm doing. There's certainly a lot of professionals out there that have the same. And so we're still closing transactions within 30 to 45 days, 30 days for purchases, 45 days for refinances. So I think that it's really important to understand when you are doing your research to find a mortgage. There's a lot of options out there. Every consumer has a right to do and choose whoever they want, but understanding those timelines and how that's going to set them up for success, especially if you're on the purchasing side. What does that mean for you? If we know that there's 1 month of inventory, just saying that out loud is insane. If there were no other properties that hit the market, we would have 0 homes for sale within just over 30 days.
Yep.
So when there's also a bunch of people in the door, I had some clients over the weekend, Andy, I'm sure that you have tons of stories like this, but I had a client that submitted an offer. The price was $500,000 over this weekend, and there were 18 other offers on the table. So if your offer is one of those 18 and you are working with a big box bank who can't commit to a 30-day closing, if they're at 45 to 90 days, you're not going to win that offer.
You are not going to win that offer. I'm very confident in that.
Yeah, there's 17 other offers, depending on who it is that they're working with. But that seller,
they're probably, if you just think about numbers, there are probably a couple of cash offers with quick closes in there and flexibility on possession and like a lot of favorable stuff. So yeah, you're right. If you compare one of those offers with one with the big box banks that their timeframes are further out, that's an uphill battle, my friends, that you are more than likely not going to win.
Yeah. And not to knock the online companies, but at least in my experience, the majority of sellers they won't work with online companies. So the cheapest provider out there, while you can get a good deal, doesn't equal the best provider. So those are all really important things to understand when developing your strategy to get a piece of the pie of what's happening right now.
Yep.
And so 6%, that means you got to put a little elbow grease to get your foot in the door. And having a strategy in place to be successful with that is super important. Now, the majority of consumers rely on mortgage financing to purchase real estate.
Right.
So, in that case, again, coming in with the strongest ability to close on time, having your ducks in a row with your pre-approval, those are all super important things to be mindful of if you're going to dig into the market right now. So needless to say, because of all that demand, we're crazy busy with applications, with people wanting to get aligned and start digging into it and hopefully get a property within that 30 days of when they're listed. So it's not impossible, but I've been telling people with a little bit of elbow grease and a great plan, it's perfectly doable.
Well, that's going to line us up for a little bit down the road in this discussion, because we don't want to just have a conversation. We want to give people actionable steps that will benefit them and help them put together a plan. So we'll get into to those tips here in just a bit. Let's get back to our headline segment of our time together. The perfect storm. Well, here we are in 2020, entering into the best housing demographic patch ever recorded in U.S. history. We have built-in replacement buyers at a time mortgage rates are low and are likely to remain so during the next 5-year period. One might say this is the perfect storm for housing to outperform other economic sectors for years to come. Then COVID-19 happened, and the chaos theory and butterfly effect took hold of the U.S. economy back in March. And I've seen the movie The Butterfly Effect, but I have no idea what they're talking about right there. So,
Great. Well,
just gonna be honest with you.
Yeah. Hilarious.
So the perfect storm. So let's recap these here. So scorching hot housing market. U.S. housing market heats up ahead of election. The housing market faced uncertainty in March, but now it's a circus, folks. The perfect storm.
Yeah.
And those are the headlines that consumers and borrowers and buyers are looking at probably on a daily basis if they're doing some research and figuring out like what is happening in the real estate market. And the one thing you have to be careful about that with is that a lot of this stuff is national. And every market is different. Portland, Oregon housing market is going to be different than San Francisco and certainly Seattle, even though we're all on the West Coast. So you just have to pick your information.
Take it with a grain of salt.
That's right. So let's talk about 5 tips to navigating this market. So we've talked about the challenges and kind of where we're at in the market. And the five tips that I would say are going to put you in a position to succeed in today's market is number 1, be patient. You have to have the right mindset going into this because you are going to deal with some challenges. And I mean, real estate is challenging in any market. It could be the best real estate market in the history of the world or just very normal, and challenges still arise. So you need to go into it with the right mindset, knowing there are going to be challenges and knowing that you're going to have to address those challenges, come to the table with solutions to the challenge, and then have some discussion and choose the best one that's going to help you get to where you want to go. Next one, number 2 is pick your team wisely. I think that too often I see people that don't have the best overall experience because they chose an agent that somebody just recommended to them, regardless of their experience, their expertise. They might just have a real estate license and they're friends with somebody. That doesn't mean that they're qualified to navigate, buyers through this market, buyers and sellers through this market, because it's just one of the most challenging markets I've ever been a part of in my 21-year real estate career. So pick your team wisely. It will make the world a difference, and it can be make or break whether you actually get the house that you're in love with, or that you have a good experience and just a good customer journey. Number 3 is expect the unexpected. Crazy things are happening on a regular basis. So not much else to say about this one. Just expect the unexpected and use your patience and stay calm. Stay calm. Number 4, the more upfront work you're willing to put in, the more prepared you will be to navigate this tricky market. And that's what you were talking about a few minutes ago, Annie, is just being prepared, get your ducks in a row. And I think that you're gonna sleep easier at night going through this process if you put in some upfront work and set yourself up for success. And your real estate agent and your mortgage provider can help put together a solid plan as far as that goes. And then number 5, I think this is probably the most important one that I think just gets glossed over all the time, is clearly know where you want to go and why. So why are you moving? There's got to be some sort of a real desire. And you have to circle back around and focus on that desire on a regular basis when you're going through challenges, and know why you're going where you're going. It could be grandparents want to get closer to their grandkids or their family, or moving. I see a lot of people moving out of the metro markets into more suburban markets. I see more second homes being purchased right now. So if that second home is being purchased for your family, and so that you guys can spend more time together and get away from the chaos that the world's experiencing right now, which is why I think that people are doing this, then keep that in mind and know why you're doing what you're doing, because it's just going to keep you moving forward with positive momentum throughout this process.
Yeah.
So besides those 5 tips, Annie, what would you say the biggest challenge that you're seeing from your side of the business, and like how are you combating that and helping set your clients up for success?
Sure. Well, right now in this current climate that we're in, COVID has really presented a lot of additional guidelines that lenders have to adhere to. So if you are somebody who are self-employed, there are additional restrictions to determine whether or not you are creditworthy to obtain a mortgage. So banks are required, all mortgage lenders are required to do a lot of digging on what this year has done for your business. Right. So self-employment, tricky road, not impossible, but tricky. So being able to chat with somebody about what does this mean for me, having them evaluate what an underwriter is looking at long before they're digging into the market, super, super crucial. If you are a W-2 employee getting a regular pay stub, were you on furlough during this time? And what does that mean for your ability to become approved? Some lenders are taking an average of what your income is so far this year. So if you were out of work for a number of months, that average could drastically drop, affecting your ability to qualify. So I don't mean that to sound scary or that it's impossible, but again, knowing this information and doing your research and talking with professionals that know what it's going to take in order to allow you to get into property successfully, super, super important. If you were somebody who took advantage of a mortgage forbearance, that also means something. And there's usually 2 types of forbearances out there. You either are repaying. So if you skipped a couple of months of payments, you're repaying that lump sum at the end of the forbearance period, bringing yourself up to speed, and then continuing to make monthly payments at your minimum payment or whatever it is that you typically pay. Or those months that you chose to forego making that mortgage payment are getting tacked on to the end of your mortgage. So you're paying longer than a 30-year period of time to make up that difference. And each of those, depending on the situation or the solution that you chose, means something when it comes time to get pre-approved or ultimately approved for the home that you're purchasing. So just COVID alone, aside from, the housing market and buyers having to put in extra elbow grease and being patient and all of these steps that we've talked about, having a clear-cut plan. So, if you are a buyer that is looking for a $500,000 home or a $300,000 home or whatever the case might be, you don't want to go into the market looking at a $500,000 home if that's your absolute max. Unfortunately, you're going to get priced out of the market every single time because, again, not saying that this is what happens every time, but in the situation this weekend, there were 18 other buyers. So you can guarantee if a home was listed at $500,000, and Andy, you can probably talk about some statistics here, but most properties are going for 3 to 6% over the asking price.
Well, I mean, if you just look at the overall market and properties have appreciated 5.6%,
right?
I mean, that's kind of the increase, and there's no way for me to know exactly what that number is.
Right.
And I think it depends on the area, the neighborhood, the city.
Exactly.
There's so many different factors that, some neighborhoods are seeing 3 to 6%, and some are probably seeing dramatically more. So
sure. And that's not to say that some, might sell around what it is that they've listed at, but in the Portland metro area in general, your properties go for higher than what they're listed at. So that said, again, if you don't take that into account, it can become really frustrating. You're going to get priced out of the market. You're going to spin your wheels constantly trying to get an accepted offer. And there is a definite strategy that can go into that. And don't rely on just your real estate agent. Chat with your mortgage professional where that's concerned so that these professionals know how to get their offers accepted. And so it's really important, aside from the COVID challenges, knowing all of that ahead of time. But the number one challenge is just making sure that you're not pricing yourself out of the market. And what does that mean for the loan that you're relying on in order to get you into real estate?
Yeah. Awesome. Great tip. Thank you for that. The one thing that I see as probably the biggest challenge on the real estate side is once you get a home under contract, is navigating through the inspection period because of buyer and seller expectations. So sometimes they're just so far off because the buyers feel like they're paying at the top of the market or over market, and sellers know that they're in a strong position, so they're digging their heels in and being less willing to find a win-win scenario during the inspection period. In the vast majority of terminated transactions, listings that come back on the market are during that inspection period.
Sure.
So I think you're right that there are very specific strategies and tactics and really teamwork as you're working together with your loan officer and your real estate agent, and you have the buyer. It's like you guys all making sure that you're working on together to execute the plan that you put in place initially is gonna just, I think, give people peace of mind more than anything, and just make for a smoother process, which I know is important to people. So,
absolutely.
Yep. Okay, my friends, we are going to wrap this up for today. For those of you who have watched us in the past, thank you for being loyal listeners. We greatly appreciate it. If you have any specific real estate related questions, comments, or you just don't know what you don't know and you think that there's a need, then we are happy to just have that conversation and provide you with the information that you need to make an educated decision on what is best for you. So thank you guys so much for tuning in today. We greatly appreciate it, and we will be back with you here in a couple weeks.
Okay, awesome. Great
Bye
to
for
see
now.
you. All right, take care.